guys, welcome to my Ocean One and Then Some channel. I think I'm going to roll with that. Anyway, I want to get the YouTube disclaimers out of the way. None of my content constitutes professional advice. Viewers that follow any advice, content, suggestions, trades, anything from this channel, do so at their own risk because you are responsible for your own actions. All right, let's jump right into it. Now, I reached out to a bunch of my viewers and I asked them if they would be interested in learning how to sell calls and puts. And overwhelmingly, the vast majority of them commented, hey, go for it. Always interested in learning new things. So I've decided to do that. And I did a previous video. If you've not watched that, I would encourage you to watch that. It kind of sets you up for this one. But this one, I'm just going to hit what I think are the basic things that you need to understand in order to do this. So I'm just going to start right here. I got a little list in front of me. So I got 10 things. I'm actually going to look down. I'm not going to name them 10 things, but I'm going to look down. I made some notes for you guys. And the first thing we need to know is, we are selling. I think most traders know how to purchase calls, but generally speaking, most traders do not know how to sell calls. I'm just speaking in general terms here, okay? And most people are afraid of options, and I get that. I studied pretty hard to learn all of this. Hey, as a matter of fact, I need to go get that for you guys. Okay, that made me think of it. I went upstairs and got this book for you, and hopefully you can see this. It says Options, a Strategic Investment by Lawrence G. McMillan. And this is the book, okay? And I read this. So I'm pretty much self-taught on anything. I never took like finance classes or anything like that. Just anything that I was interested in it. So I never really found any trouble learning something that I was interested in. So I read that book, and at about the same time, roughly, I took a options class from TD Ameritrade. It was like an 8-hour class, and I took that, and I have a certificate for that somewhere. But anyway, that's my experience, and I've been doing this for, I don't know, maybe 4 years, somewhere in that neighborhood, give or take 4 or 5 years. I've been doing this, probably longer, maybe 5 or 6. Time gets away from you, time marches on. But I'm going to go over the basic things here. So that's my experience. I'm going to go over the basic things here for you guys to know how to. Thanks. My wife just brought me a cup of coffee. All right. How to do this. So, you take any of this at your own risk, but I'm going to walk you through my trades weekly as long as I'm interested in doing this, and as long as my audience is interested in me doing it. So, to sell calls and puts, there's a couple ways you can do this. You can do this naked. You can sell calls and puts naked. I do not recommend that. I encourage you to 100% stay away from that. It's like an absolute no-no. You can get yourself in deep doo-doo very, very quickly selling naked. So just scratch it off your list. And what naked means is that you do not own any shares to back that up. Okay, the next way you can do that is you can structure your trades with buying. Now, I know we're selling, okay? But you can also buy a call or a put and structure your trade, your sold call and put around that. And that will keep you out of trouble. And there's nothing wrong with doing that, but I normally don't do that. So I'm not going to recommend that you guys do that either. So I'm just, I would recommend if you want to do that, that's fine. It's probably something that I will rarely do in my videos. Occasionally I will, especially around news as protection. But right now I'm simply interested in bouncing back and forth. If I get assigned, fine. If I don't, fine. I'll handle it fine either way. And the third thing that you can do is you can do what the trade that I have up on my whiteboard is you can sell covered calls. So right now I own 200 shares of Rivian. So normally I would not sell 2 calls even though I have 200 shares of Rivian. Usually I would only sell 1/3, but okay, that's a story for a different day. So you can sell covered calls, and that is much safer than the other 2 that I have mentioned above. Especially selling naked. Now, in order to do this, what I would recommend doing for your first trade, just to get shares, if you don't already have shares, of Rivian or another stock. It doesn't have to be, I guess I need to look over there. I'm always looking at myself. It doesn't have to be Rivian. You can do this with any stock, but I thought Rivian would be a good fit because, you know, most of us on my channel, we're huge Fisker fans and still are. I mean, I'm hoping Fisker survives. It's just not looking good. So I would recommend that you have enough money to purchase 100 shares or 200 shares or 500 shares, whatever you're going to use. I would recommend you have enough to do that. So let's keep it simple. So let's say Rivian is $10. You need to have at least $1,000 to sell the put to cover the shares in case you get assigned. So you could sell one put. If you got assigned that, then, you know, okay, you pay the $1,000, you get the Rivian shares, and then you turn right back around and start selling covered calls on it. Or you could purchase the shares up front and then start selling calls on it. So that, you know, that would be left up to you, and I will get you there, okay? Number 5, you need to have at least 100 shares because you can't sell a covered call selling them covered. You can't sell a covered call unless you have at least 100 shares, because every contract that you sell, whether that's a call or a put, you're always dealing with 100 shares, so make sure that you don't forget that. Now, before we get too deep into this, unless you're trading in a Roth, and if you're trading in a Roth, you don't have to worry about it. But if you're not trading in a Roth account, then you have to plan for taxes. You know, taxes are a part of life. You're not going to get around those, and those will be taxed at short-term gains. They will be taxed at your current tax rate, whatever that is, whether that's 10%, 20%, 30%, 39%, you know, whatever it is, okay? You're going to get taxed on any profit that you make. So keep that in the back of your mind. You will pay taxes on all of your trades that you make money on. Now, how did I get my shares of Rivian? Well, I got my shares of Rivian I kept selling puts. I sold puts, I sold puts, I sold puts, and then I finally got assigned, and I'm like, okay, big deal, I got assigned. I turned right back around and started selling calls on them. So that's how I got my Rivian shares. And I would actually, you know, if you're new to this, I would actually encourage you to consider selling puts, you know, your first time, but you have to make sure that you have enough cash to do that. And if you're not comfortable doing that, just buy the shares and then turn around and sell covered calls on them. Okay, so, you know, if you're interested in selling covered calls, then you could do that either way. So either way, that will work. Let's see, where's my other paper here? Let's go over some basic terms. Here's some basic terms that you need to know. You need to know premiums, because you'll hear that a lot. Your premiums are what you make. Okay, so I gave the example that I had sold a call on Rivian for 0.32. That gets multiplied by 100, so that's $32. So $32 was my premium. That's what I made, okay, at the beginning of the trade. You always multiply that by 100, so 0.32 or 0.10 or 0.23, it always gets multiplied by 100. So just keep that up here, and that makes it real simple. To start a trade, you know, once you have the shares to back it up, or, you know, however you're going to do that, you sell to open. Now that's confusing for most people, because most people are used to, you know, to buy, or sell. But since you are going to be an insurance salesman, accepted. If you're selling options, that's what you are. You're an insurance salesman. You are selling insurance. To initiate the trade, you're going to click sell to open. Okay, so just be aware of that. That's a little confusing at first. If you need to close your trade, or you want to close your trade, you always click buy to close. Now, typically, I will let the trade go to the end. So if you're selling weeklies, you know, you'll probably set something up on Monday. It's going to expire that Friday. I typically let the trade run its course unless I see an opportunistic thing to do. Okay, so, and if that happens, you don't have to do anything. Like, if the trade is in the money, like you are going to make money, it's closing below your strike price, then all you have to do is just wait. Okay, like my example earlier, I had sold the 1050 strike price. It closed at 1044, so I didn't have to do anything. I didn't have to buy it back. I just let it fall off, and then I can initiate a new trade Monday. The next thing you need to know is your strike price. And so if you know these terms, you understand the basics. Your strike price is the price that you're selling insurance for. So everything revolves around the strike price. You know, $10.50, $11, $9, and I'm using those numbers here because I think that's basically where Rivian is going to trade unless they get big news or they start making a profit. So, you know, you're probably looking between $9 to $12 a share for Rivian. It's probably going to, probably going to stay in that range, but there's no guarantees on anything. If it starts looking like they're going to start making a profit, of course, I would expect that to rise. If trouble comes up, I would expect that to go down. So number 9 here, I have some basic rules. Now, I have more rules than this, but I want to keep this super simple, especially here at the beginning, and I can throw things in as time marches on. Rule number 1, don't get greedy. Just don't get greedy. You're doing this for a recurring income, or I'm doing this for a recurring income. Okay, maybe I shouldn't say you. You guys are watchers. I'm just going to walk you through my trades. What you guys do is on you, okay? I never get greedy. I just don't get greedy. When I'm selling this stuff, that's my number 1 rule. Don't get greedy. Number 2, be flexible, but stay in the trade. If you see a reason to get out of the trade, get out of the trade. But realize, the stock's going to go up, the stock's going to go down, and where it lands on Friday, believe it or not, a lot of times those option chains will determine where that falls on Friday. Now, there's no guarantees there, okay? But Fridays tend to do strange things because that's when options expire. Options always expire on Fridays. So no matter what the stock is doing Monday, Tuesday, and Wednesday, realize there's Thursday and there's Friday. So until it closes at 4 o'clock Friday, things happen, things can change. And the last rule here is refer back to number 1, don't get greedy. Just don't get greedy with this. And number 10, the way to look at this is you want a recurring income, okay? Now, the more money you have, the easier it is to do this. Now, I'm starting small, I'm starting over, got wrecked in Fisker, okay? But, do you see me pouting about it? No. When life throws you lemons, you just simply try to make lemonades out of it. Now, I'm not talking, life is catastrophe here, your wife dies or your kid gets killed, just something horrific. I'm not talking about that. I'm just talking when life throws you challenges, you rise up to the challenge, So I got crushed in Fisker. I accept that, and I'm moving on, Now, I still love the company, and I want to see it succeed, and I hope that it does. But, it looks grim, and it clearly needs a miracle. So what I'm hoping that I can do with you guys is I can just kind of walk you through my trades. I'll try to do this the best that I can, but I have been very busy recently. I had a little extra time today being Sunday. So I'm making this video on Sunday. I don't know. Should I post this today or should I wait until tomorrow? I'm not really sure because I just posted one earlier. I might be better off just posting this tomorrow sometime. But anyway, I appreciate my audience, and I hope you can learn to do this. Hope you appreciate it. And I would just really encourage you to not get greedy, not get in a hurry, and just realize that you want a recurring income. You're not swinging for the fences here like I did with Fisker, okay? I bought shares hand over fist with Fisker. Anything I made on selling calls and puts, I turned right back around and I put it into shares. Because my philosophy was always, as long as I don't go bankrupt, I'm fine. I'm going to sell calls and puts. I'm going to sell calls and puts, and the more shares I have, the more I can do that. So, pretty much the worst possible scenario happened there, and, Fisker just, it doesn't look like it's going to survive. Not survive as we know it, most likely. Okay, so, that kind of wrecked me there, and I did go all in. I was swinging for a grand slam, and I struck out. So, anyway, I'm going to walk you through these trades, and I hope you learn, I hope you appreciate it, and I hope you find it beneficial. All right, guys, until next time. Having trouble with my clicker.